simple way to explain fintech. Can you share that with us?
Sure. I think, and when we see this in our lives, and if you've seen a lot of these either bubbles or these buzzy kind of trends, sometimes a lot of people just talk about something without really knowing what they're talking about. And I don't know if I'm one of those people that knows what they're talking about, but I'm going to try. The way I think about fintech is that it is anything where that makes the transfer of value more efficient and more accessible. So anything that makes the transfer of value more efficient or accessible. And what I'll give you an example is, right now, every one of us, or most of us, I'm assuming, have a smartphone where you may have the ability to send money on your phone to someone else. It could be in Hong Kong, HSBC has a PayMe app. There's Venmo, and there's other versions of that. There's the payment transfers. There's Apple Pay. All of those things allow for you to have the power. So you don't even need to carry a wallet. In China, you don't have to carry a wallet with you anymore. Most of my friends don't even carry cash with them. They just carry their phone. And so anything that makes the transfer of value more efficient, which is one example, and then more accessible, meaning that more people can get to it. So if you look at certain developing countries as an example, you might have more mobile phones than you have bank accounts. And it's really fascinating to think about what that means. It now means that it's possible for someone to open a bank account if they have a phone, when they might not have the physical access or the credit history to go to a bank with their physical ID, with a way to measure their spending history. So I look at it as anything. So there's a broad range of things that can qualify as fintech. And I use it as a pretty broad term, because I think the first question to ask someone when they're talking about, they're saying they're a fintech expert. I am not one, so I'm going to try not to shoot myself in the foot here, but ask them, what part of fintech are you talking about and how you define it? Because there's such a broad area. So I think you need a definition that's encompassing but simple. And I hope that's my definition so I can understand it.
Okay. Are these the ones that we relate with the microfinance markets and within the developing countries, that there's a lot of those booming?
Sure. I mean, I think microfinance at one stage probably wasn't fintech per se, but I think some of the systems around it and the ability to transfer money by an SMS message, which has been used in many developing countries where microfinance is critical, which means really two things. One is that you can have a payment for, let me put it this way. You can electronify or digitize a mom and pop store or a farmer that as long as they have a phone, that they can accept payments and keep track of how they're doing. And microfinance is about making sure that we're democratizing or spreading out the ability for folks who haven't had access to certain financial services and make it easier. So simple things like providing credit to a woman in Bangladesh so that she can build a farm. I mean, there's many examples of this around the world, and microfinance is obviously a core part of it, but it's using technology in a way that we haven't thought about before so that more people have access. So microfinance is a really important part of it, and hopefully more people can build wealth. And I think it's one of the biggest issues we have right now. The more it's actually expensive to be poor because it costs you more when you borrow money. You don't have access to the loans to allow you to either grow your business and to transfer money. It's a lot easier to transfer money if you're rich across countries versus an individual. So those are all these things that are very high barriers to entry and friction. And it's one of the drivers of where fintech has gotten really hot over the last decade or so.
Is fintech subjective? Because as you're saying, it's harder to be poor in this sense and get on board with fintech. Is fintech subjective to expand and to be able to allow everybody to access the technology? Because if I can ask you, I think about Uber. Could that also be part of fintech, or all of the other apps that we utilize?
Yeah. I mean, I think that's a great question. You know, the ability to call an Uber, I don't know all the details on it, but the ability to pay, you're not having to need cash to take a taxi, for example, but the network effect of Uber, the information they collect, but the ability to pay without cash, the underlying system behind that is fintech. So anything, again, where the transfer of value from person to person, person to company, company to person is smoother. And so one example of that, or two examples of that around the world right now is Stripe. I don't know if everyone's familiar with Stripe, but it is the largest, it's the highest valued private company now in the US, $95 billion, very popular payment system, which essentially enables, again, a food truck or a mom and pop store to more easily accept payments and give payments than they could have before. The credit card companies are a lot more expensive, American Express, MasterCard, et cetera. There's much more expensive to use those systems, and Stripe has sort of democratized and found a niche to do that. Very high valuation, and that powers a lot of the transfer of value. And what does that mean? That means that for that, call it restaurant or food truck or whatever, they keep more money than they would have had to give otherwise to pay a credit card company that's already a very large established entity. So they get to keep more of what they earn. Taobao and is really the driver, if you will, of Ant Financial. So on the other side of the world, another very large fintech company. What is Ant Financial? Alipay, which drove, they built their own payment system for Alibaba, and Taobao and Ant Financial is a very highly valued company because it enabled the transfer of value between sellers and buyers in a different way, because the payment systems at the time in China were not as robust. And so they built their own and then let everybody have access to it in a different way than they had before. So the theme is very high valuation. So there's a lot of money going into it, but these are powering commerce, right? It's keeping more money in the hands of the people who are selling and buying. And those costs get passed along to, maybe you don't always see it, but there are value added to the economy because more transactions can happen at a cheaper rate.
Okay. And you also were saying before that fintech's definition might be different for everyone, and it depends on which aspect of fintech are we talking about. So what is the biggest preconception, or one of the wildest ones that you have heard from someone else explaining fintech, or what do they believe fintech is?
Yeah, I think that's a great question. It's a difficult one to answer. And also, if folks have other things that you want to focus on or you're curious about, I've been able to study and look at a couple different parts of the ecosystem at times, and have friends in different parts of it as well. So I'll try to touch upon it just in case this is too broad and too general, which this can be. I think some of the biggest preconceptions of fintech are, one, that it's brand new. This is cash, right? This is paper money. Why does this have any value, right? I can't eat it. It won't save me from, if I get, dumped by someone, it's not going to help protect me. What's the real value of this piece of paper? The only reason this has value is because we believe, at least in Hong Kong, that this has value, and I can go out to the store and buy it and someone else will take it. So it's a store of value, right? So, and paper arguably is technology as well, or it was, right? So the idea that technology has to be really super fancy, it's paper is a technology that was better than what they were using before, and they applied it for this. And so this is being replaced now by this, right? So it's the next evolution of the store of value. So fintech is not new. That's number one. Number two, does it have to be the latest, fanciest crypto? No, it doesn't. There's all kinds of versions of it. And I think blockchain is an example where there's just a great deal of buzz for a lot of good reasons because of the potential use of the underlying technology. I don't want to bore you with some of those details right now, but I think you can make an argument that going from paper to digital to then crypto, as an example, as a store of value, that could be an evolution of that. So everything builds on something else in the phase. So it's not like this is brand new stuff. That's number one. I think number two is that it's all individual, it's all payments. I think sometimes people forget that there are systems in place to let me put it this way. So that's not like online lending. It's not only like crowdsourcing. There's just a lot of things that aren't what you see in terms of B2C, B2C, P2P kind of situations. There's a lot of technology that drives how companies work with each other as well. So I think one of the misconceptions is that a vast majority of fintech or all of fintech is really to consumer rather than between businesses. And so I think that's the other thing I would highlight from my perspective.
For small businesses, because obviously here in our crowd, we have all the entrepreneurs, and perhaps some of them have been in the business for a few years, or some of them are starting, or we're in the middle of the stage of our entrepreneur journey. How can we utilize fintech better? Because this might sound a little bit wild, and please let me know if it's crazy. I had a conversation with a friend the other day, and she sells diamonds. And this is her main market, right? She sells diamonds to the US and here in Hong Kong. And she was saying to me that now she's seeing fintech, and obviously with crypto or blockchain, as a competitor to her business, specifically with diamonds, because people before we used to buy the diamonds, store the value in the diamonds, and then keep it without perhaps not a lot of people knowing that you have that amount of value in your hand. And now it kind of happens with crypto that you can buy it. And since in some places it's not regulated 100%. So is this changing also the consumer ways and the way that we see how we store this value? And how can entrepreneurs compete with that? This is a very, very specific example because obviously it has to do with a high-end stone. But when it comes to any other services, is there anything that we should watch out to benefit our businesses from, or to be careful with?
Yeah, I mean, I think that is really involves a lot of different components in that question. Yamilette, I think I would break down to one or two ways to try to address some of that. Is where are there opportunities within fintech if you're an entrepreneur to play in? One. Two is, if you're starting a business that may not be in fintech, how can fintech help you get up to speed and help your businesses? And then third, I think there is a question on stored value or crypto, or some crypto as a store of value. There's a huge debate going on around that, and if you follow the NFT world, that there's, it's like artwork. There's artwork that literally is being that's either generated or been paid with crypto, or is underlying that, and there's massive value being created. And what is value? Someone might think the Mona Lisa is priceless. Someone might think it's not worth much. So it really depends in some respects on the beholder. So I can come back to that. But I guess the first thing, I think there are massive areas within fintech globally for people to play in and to think about. And so what are the pain points that you have when it comes to your finances, as an example? So one of the hottest things right now is called wealth tech, and or sort of trading tech, if you will. So Robinhood is a very famous example right now in the U.S., where there's no fee to trade. There is a fee, there's a cost, but there's not a monetary fee. The cost is driven by the information collected by the company that's shared with others, which is on your trades. And that is, there's been a lot of controversy around that, but it's not that different in my opinion only. This is obviously not the company's view, but my opinion is it's not that different than going to Google and knowing that when you're searching for something, you're giving up something because someone's collecting data on you so that I can get the information I want faster. So wealth tech is one area where people are like, I don't really know my finances. I don't have a sense of view of how I can build wealth for myself or for the next generation. So there's a lot of companies getting into that where I would like to invest in the next Uber or the next Facebook or the next Tencent, but I don't want to do it when it's public and just through the IPO, because I might not get much and I want to take more risk. And there's a lot of questions and concerns about regulation around that. But that's just one area. If you want to invest in things, how can you help to use technology to help solve that problem? So that's one. There's a whole bunch of areas in that, so we won't go into all those details unless there's specific questions. The second is, it's easier today to get payments from your clients online around the world than it's ever been before, right? Yeah. So think about, going on to eBay in the US or Taobao in China, and you can sell something, you can put something out there that you make, that you're trying to get rid of, whatever that is, you're allowed to monetize, and you can accept a payment by a credit card anywhere around the world. So the cost to get up to speed so that you can get money from your customers is greater than it's ever been before. And the other example would be crowdfunding, which has some questions or concerns about that depending on the platform. But if you're an entrepreneur, it's another way to potentially get funded by a large group of investors around the world who have faith in your idea. And there's access for entrepreneurs to money in a different way or different form that did not exist 10, 20 years ago, and is gaining, I think, some level of popularity. There are some issues with it, but that's something else. And sort of access to capital from an entrepreneur perspective. And I think the third thing, Yamilette, please stop me or help me change course if I'm spending too much time on this. But
that's very interesting.
Very kind. But on the third point on a stored value and disrupting sort of that high-end diamond kind of play is sort of back to the money thing, right? A diamond what is that valuable to? Who is that valuable for, right? And there's questions about the certification of diamonds. So there's a lot of application of technology where there was someone the other day who was saying, a professor at one of the universities in Hong Kong was saying how his wife doesn't like diamonds because she's concerned about the fact she can't certify that it's not a blood diamond, that it's not, she can't certify the origin of it. Some of the technologies of blockchain can be used to help certify that as well in a different manner than you've ever had before. So that's just one aspect of sort of that kind of trade. But the other aspect back to it is, is crypto a replacement for gold? Is it a replacement for diamonds? Or is it just another asset class? And I don't have those answers. I don't think anyone really does. Is it worth what it is today? Is it worth 10x or is it worth nothing? You will find all of those answers written by very smart people who have different views on it. And so the answer today is really someone thinks it's worth that, so it is worth that. And how do you create something that stands out amongst the crowd? So be careful about jumping in when everyone is in it. There's, I think, more than 100 cryptocurrencies right now. I don't know the exact number. Someone on the call might know and can correct me. But are you really being unique? Are you really doing something different? Or are you just jumping in late in the game? So maybe think about what can you do that's different and unique to your business that is providing value or creating value.
Yes, you're totally right, because as we're talking about trends, most of us, we want to, it's almost like the hamster on the wheel, right? We want to go there and not miss out. And you're totally right. We still have to be careful and educate ourselves. And that's why we love these sessions, because we can get more knowledge and then make better decisions. I want to go back to the fact of fintech can be different for everyone depending on where do you put that idea of value. Sure. For you, why fintech for you in this stage of your, I know you already mentioned about data and the analytics, but perhaps was there any personal reason that drove you to fintech? Because I also know that you are starting your master's in fintech. So there's never a point where we should stop learning. And how is this helping you? Because us as entrepreneurs, that would be another thing that I would say, even though we might have a very good product or a service, we should always try to get better and to get more knowledge.
Yeah, so I'll deal with that and then the studying first. I like learning. I think it's important, and there was someone said the other day that they wish they had more time. I know a lot of us are at home right now. I hope everyone's safe and your families and friends are safe as well. But that because of the stay at home that many of us, or work from home that many of us are dealing with around the world, there's more time to read books and things like that. And I think you have to carve out time to do that, to learn. And that if you just caught up on all the books that you meant to read, and I have this problem, I have a ton of books on my Kindle that I haven't touched, or read the first chapter and then I stop, is once I'm done with that, there's another 10 I really want to read or that I'm really interested in doing. So you're always playing catch up, and that it's the world is moving on, technology is moving on. So the way I look at it is, how do you surround yourself with some base knowledge, but with the right network of either peers or, in this case, professors who are spending all their time doing this. I have a day job and I'm trying to learn about this, because even after this program at UST, that's a part-time master's, I'm going to be out of date by the time I'm done with it. But at least I have a baseline to continue to push and to surround myself with experts. So I looked at graduate school, and I did my EMBA a while ago, is I'm never going to be the expert at everything, but if I know a few experts, I can always pick up the phone. And if they pick up, and if they answer when I call, then I can get to that much faster than trying to learn it on my own. So surround yourself with experts, and hopefully that's something you can leverage. That would be one piece of advice. I think when it came to fintech in general, and my bias is on capital markets fintech. What does that mean? That's sort of exchanges, digital trading or e-trading. How do the investment banks, JP Morgan and Goldman Sachs, as an example, hire many developers every year? Actually, Goldman, I think, has more developers and technology folks than they do investment bankers now. I'm not sure if that information is still true, but they've moved and shifted more and more. So these financial institutions are, in some respects, becoming technology companies. And then on the other side, in Asia, what we saw is Techfin, which is technology companies moving into financial services. And those examples include Alibaba, like I mentioned before, with Ant Financial, and then, of course, different kinds of payment systems that have developed as technology companies have moved into financial services. Why I got really interested in it is because I fundamentally believe that a strong and efficient capital market system enables capital to get to companies that deserve it. So if you have a vibrant capital market system, then that is a way to demonstrate the health of the underlying economy. And what that means is that there are more jobs, that hopefully the standards of living increase, and that it's not just the elite and the rich who can access the markets. So the more efficient the markets are, the more people who have access to these wealth products, if you will, the better it is eventually. Unfortunately, it's continuing to increase rather than to decrease in terms of the wealth gap in many parts of the world, Hong Kong being a good example of that. In many parts of the world, with COVID, that's being exacerbated. But if markets have a role to play in getting companies funded that can make things better and cheaper and more efficient for people, then the level of living, the health standards and living standards can rise, so that it's better for all of us over time. So hopefully funding goes to things that are innovative, such as some of the tech companies. Some people might argue that's bad, but also some of these companies that are trying to do good, whether that's in green energy or other areas. So it's about making sure that capital is getting to the right places and companies to provide value for society in the long run.
Okay. You mentioned fintech versus Techfin. And I understand there's a difference between how this company started. There might be first technology companies turning into financial companies and the other way around. Is there any other big difference between these two types of fintech, Techfin?
Yeah, the biggest difference is really in those segments, in my opinion, is geography and regulation. If you look at it, there's talk of Facebook building a cryptocurrency with Libra. If Google or Amazon wanted to become banks, even Walmart I think, is moving towards becoming a bank, but more from the, not even a financial institution or a tech company, right? It's actually trying to become a fintech as well as it moves into it. So in the US at least, and I apologize, my biases, as you can tell, talking about the US and talking about Asia when it comes to this, and that's where I spend my time. So I know there's a lot of other great examples around the world. But when it comes to the biggest difference between Techfin and Fintech, there's very established regulation in the US for what it means to be a bank, to conduct certain financial services transactions or offer those services to your clients. And that regulation sometimes comes with high costs and supervision and different licenses that are required that can be very expensive. And so technology companies and financial institutions have sort of this a little bit separated in the US. And so it's not as easy for a technology company to move in on the turf, if you will, of a big commercial bank in the US. While in China, to use that example, some of these technology, the regulations haven't caught up to it. They didn't know what to do with some of the things that were happening. So sometimes the regulation isn't fully established. And I think what you see is that these big technology companies in China had more freedom to experiment at one point. I think that's changing depending on your point of view from the Chinese regulators. And one example of that is the delayed Ant Financial IPO. But the difference has been that in China, they didn't necessarily know how to didn't regulate all of these things in that way. And so the regulation in some respects is playing a little bit of catch up as these new markets and new innovations are coming to the fore. And so back to the data thing, why is it so, why would it be sort of scary or important or whatever for in the US for the, Google or Amazon or Facebook or Microsoft to all of a sudden, become a bank? Well, they collect a lot more information about you than your credit card company or your savings account or checking account. They know a lot more about what you pay, what you use, what you search, what you like, what you buy. They have they have too much information on you. Maybe that's dangerous. But if they also then become your financial institution, they might control everything. So I think there's a little bit of that's the scary version of it. I think net there's a positive version of it, but I would say geography and regulation have been the biggest differences of where you've seen Techfin rise and where you've seen sort of fintech continue.
Okay. And we've been talking about big data, and this is part obviously of the fintech and the need for that data and the exchange and collection for that data. And going back to that idea of us knowing what's next, what are these trends of 2021? What are we going to be talking about? Or do we just call them trends because it's a hip way to call them and it's constantly the similar conversation in big data and crypto? Or is there anything super new that you wish to share with us?
Yeah, I mean, I think there's nothing super new. I think the focus tends to move around a little bit. I mean, I remember when not too long ago, peer-to-peer lending was this huge, massive thing. I don't think we hear much about that today for a whole host of reasons. The two themes sort of this year thus far are really about crypto and blockchain. When you look at the continuing price increases of it and the innovations that are building off of it. So I think there's different views as to crypto as a currency, but then there's blockchain as a technology. So that's something that we need to sort of split a little bit. And we can talk more about that if that's good, but that's a big topic right now. And you're seeing a couple of different things around that. One is you see governments now thinking about getting into the game, developing their own digital currency. Some of it's more talk than not at the moment, but that's a big trend because people don't know what to do with crypto overall. There's more institutional investors taking a look at it. There's more individuals who are interested in getting into the space than ever before. And you have a wide range of views as to whether it's a bubble or whether it's the beginning of a big trend. So I would say that's going to continue for the year as people try to figure out how this fits into their investment portfolios or usage. So that's one major trend that I think is definitely going to continue for the rest of the year. The second one is back to a little bit of, if you watch this Robinhood GameStop situation in the US, which is people are trading now. There's a gamification of trading that maybe it's too easy to access the markets. And I think, again, this is a very controversial question, but should everyone have access? Should everyone take their stimulus check in the US? They just, big multi-trillion-dollar stimulus package in the US. And are people going to take those checks and just pump it into the markets? I don't know the answer to that. I think people need it, in my humble personal opinion, that there's a lot of people who are struggling who really, really need that money and are going to use it for real things. But there's a concern by some people that that's going to go a different way. So what is that access to the markets? And should there be breaks to slow that access down, that not everybody can do that? Imagine getting addicted to a video game on your phone or a game on your phone, but doing that when it comes to trading. I think there's some questions and concerns about that. So what does individual retail trading mean going forward as more and more people have access to it? There's a whole bunch of other things, but I think those are two things that we've heard of in the first quarter that I think are going to continue and be significantly important as we go through the rest of this year.
Is there, if I decide to go into trading, and that would connect to my next question, if I want to jump into fintech today, what are like the top 3 things I need to know or watch out for in this type and this reason that you said about trading? Is there anybody teaching us how to do it in order not to get into the addictive scenario?
That's a great question. I definitely don't have a good answer for that one. I think that there's a bunch of people who seem to have these YouTube ads telling you how you're going to make a lot of money if you follow their tips. And I think there's a lot of KOLs or influencers on Reddit who would say this, or others who would say the same thing. I don't have a great answer to that. I think it's just don't get different perspectives and learn from people who have real experience. And I guess one example would be, there's one of the themes that I spend time thinking about, though it's not as hot as some of the other areas, is reg tech, right? So things that are making regulation easier, or soup tech's another version of that, supervision tech. And if you think about it, it's like fintech is just put any word in front of tech and it'll become fintech, insure tech and payments tech and whatever. It's becoming almost ridiculous. But when it comes down to, I think, your point on trading, I think it's very important that people do their homework before you go out and try to buy a crypto, or as an example. Some of these exchanges are regulated. I don't know enough about it. I'm just saying there is a use for regulation, in the sense of, if the exchange you're going to is regulated, that means that someone is watching to make sure it's legitimate. Whether or not they're doing it right, or whether, it doesn't mean that you're going to be perfectly protected, but that gives the consumer some protection. So if you're going to think about investing in certain of these asset classes, I would do your homework, make sure you understand how to get your money in and out, make sure that you're dealing with entities that are reputable, and use common sense, I think, is really what it comes down to. When it comes to trading, like everything else, don't play with things that you can't afford to lose when you go down that path. And it's just super easy to open up a trading account today, whether it's on your mobile or whether it's with your bank. That whole process is much simpler than it's ever been before. There are definitely people who are stuck at home trading this whole time, while they're online technically, or they're trading on their phone all the time. And so how do you protect yourself? I think the best protection is knowledge and doing your homework.
Yeah, as you were saying, it's just such a great thing to know that fintech gives us efficiency and accessibility, but also could be dangerous if we don't have that knowledge. Are consumers going to change their patterns? Do you see a big consumer change in the way that they buy with all these new trends, especially with crypto? Is there going to be that swift around?
I don't know if crypto will answer that, but to your first question is absolutely yes. The trends, e-commerce today is powered by fintech, right? So every time you get a food delivery or grocery delivery or clothing or whatever you're doing and buying stuff online, it's all driven off a payments network. And that payments network is more interesting than it's ever, and more spread out than it's ever been before. So e-commerce is not going away. I think the way we buy is continuing in that route. And I don't think we're at saturation point for how we pay for things and how we buy things. You know, touchless payment systems and all the different versions of payments that you can have. Splitting a bill on your phone with your friends is easier than it's ever been, instead of counting pennies or dollars or whatever. I mean, these are all things that, literally 10 years ago, 20 years ago, you would never have, thought about it this way. It's changing our behavior. And I think sometimes we don't even know it. So I think the way we transfer, it's almost you forget about it. I don't know if everyone who's in Hong Kong or not, but even the octopus card, right? Like, that's an old technology, but it's still pretty useful. I mean, I use mine every day. Maybe I'm the dinosaur here, but I think that some of these, it's as fast and useful as you need it to be, and it becomes part of your life that you don't even know it's there. And I think that's the beauty of what fintech is, when you don't even know it's making your life a little bit faster and better. And but if you run out of money on the card, or if it's not working because you scratched it or something like that, then you get really, really annoyed for like 2 minutes of like, oh my God, I have to do something else. But we don't even think about it, how much time and energy we're saving. And back to energy just quickly, it actually ties to crypto. I don't know if crypto is being used right now as a currency payment system efficiently. It has been used very much as a store of value. I think that's a stronger argument in my opinion. But are people really making payments significantly using crypto? And I think the answer to that is not really. And it's actually very expensive energy-wise, where I think there's a concern from a lot of people that crypto is not good for the environment. It's not green. I think people are looking and investing in technologies to make cryptos or future versions of it less damaging to the environment, or more green, if you will. And so maybe that evolution will happen. And when that happens, I think that changes the dynamic a little bit for cryptos. But there definitely is a real concern for that. But I don't see crypto changing the payments world that much, or at least I haven't seen the evidence myself to suggest that you're going to use that versus using the other 50 ways we can spend money digitally today. I don't think it's replacing all of that right now.
Yeah, I heard that even some doctors here in Hong Kong can ask you to pay with octopus. So convenient.
Doctors, that's great.
Yeah.
Get your shot with octopus.
Yeah, and as you were saying with the part of the environment, is there going to be any disruption and affecting perhaps some companies or corporations trying to disrupt the crypto space because of this fact that it's not environmentally friendly?
Yeah, that's a really interesting question. I don't have a great answer, but if you look at why are governments looking at developing their own digital currencies? Why is China looking at it? Why is even Hong Kong with what is it, Lion Rock, I think is the project name, between, I think, Dubai and Bangkok and Beijing and Hong Kong. Why are they looking at getting into it? There's different reasons driving that, but from one perspective, if governments then become, the value of a lot of these potential cryptos and the whole idea of that is to make sure there is no singular, point where the US Fed can just print as much money as they want to print. It's to take that power away from the governments, right? So it's decentralization. It's putting the power in everyone else's hands and arguably diffusing it. But if a government comes in and that becomes a de facto standard to use that crypto or currency, it almost destroys or threatens significantly the value of what that store of value is. And it also takes away one of the core benefits potentially, or core issues, frankly, with crypto, which is anonymity. If the government issues it, they know where every transaction is all the time. So you lose that privacy of using cash to pay for a transaction because there's no real digital record of that, right?
Yeah.
But the danger, or maybe I think there's always a flip side. Everything, as you can tell, in my view, is there's a pro and a con. The con of the privacy aspect of it, not being able to trace it, is that there's a lot of bad actors or potential for bad actors who are using crypto for other purposes that might not be positive for a society in some respects. So there's a lot of, that's been one of the questions I think about crypto is this really black market? Are the folks that are using it, are they Are they using it for natural commerce? And what do they have to hide, right? So, so I think there's some pros and cons around that, but there absolutely are governments, large traditional financial institutions that are looking at this and thinking about ways they might be able to do it better than how it's being done right now.
Oh my God, this is just a big topic, but I do want to open the floor to our members. I know Rachel, she's always having questions and she's here. I can see her face. Do you have any questions for David?
Yeah, and well, thank you so much for your time, David, and for sharing your insights. It's super valuable and very interesting. I'm located in Canada, so can definitely compare to some of the things you mentioned about the United States. But just a question for you, as FinTech rolls out, does it appear that traditional banks are adapting it, or are they more competitors?
That's a core key question, Rachel. And good evening, or good morning. I don't know what time, whether you're East Coast or West Coast or whatnot, but
West Coast.
Yeah, a little bit better. But thank you for joining, and appreciate you taking the time. Great question. My answer is that you're going to see some traditional institutions be very much at the forefront of driving innovation. And I think they're going to learn from these disruptors and are going to innovate from within. So one of the choices I think for entrepreneurs to think about a little bit is, are you going to be building something that might get acquired by one of the financial institutions, or are you going to be building your own kind of standalone company? And in my view, not every bank, and I'll just use banks in general, is as, there's a wide range of them. Some of them are pretty backwards, some of them are pretty forward thinking, some of them are doing better financially. And so it comes back a little bit to what I said about sort of JP Morgan and Goldman. They're spending a ton of money innovating, spending time on technology so they don't get disrupted by the brand new startup. And I think they're going to have a lead on some of their competitors and peers in the traditional banking space, whether that's commercial banking or investment banking, as they continue to move further and further down the road. And so you're going to have some winners, but I think the disruption is going to hurt some of those middle tier, smaller tier players who may be less efficient, don't have scale, don't invest in technology in some ways. So that is actually a really interesting opportunity, I think, for a fintech entrepreneur, which is servicing those firms. So there's this whole group of banks where you're not going to maybe beat or directly compete with the behemoth that's spending the most money, $100 billion a year on technology, or whatever that number might be, or a couple $100 million a year on technology. But for those other firms, they want to outsource. So the same way they are outsourcing sort of to people getting on cloud services now, people are signing up for other things to be more efficient. No one really builds your own CRM, customer relationship management system anymore, right? You buy it from somebody else. You let the experts run with it. So there's one trend, which is, how do you as a fintech service those companies that are going to be disrupted, but like to get up the curve so they can be relevant into the future. So future-proof themselves by, frankly, paying someone else to do it for them. I think there's interesting ways to look at it, but I do think there is, because of regulation, like I said before, that makes it pretty difficult to disrupt the entire industry as a whole because of those costs of regulation and supervision, one, and two, the fact that there's a large diversity of players in the financial institution space. So they're all at different characteristics of competition. So it's a difference between, going after, physical bookstores like Amazon did when it started. That's a little bit of a different sort of attack and disruption than trying to disrupt the entire banking industry completely. I think it comes from a different angle because of regulation, the complexity and diversity of the players.
For sure. Thank you so much. And with that as well, what impact do you think that fintech will have on the global finance and traditional banking long term?
I think it's never going to go away. I think it's part of the DNA right now, where I think if you're not innovating and thinking about the future of how technology, and there are technologies we don't even know about today that are being worked on. And I think what you're going to see is we're going to need every traditional financial institution needs to have a true CIO, CTO who is, she is looking at the future, investing, creating a sandboxes, innovation labs, whatever you want to call it. And if they don't do that, I think they're going to get, I think A, they're going to be behind their peers, and B, I think the markets, if they're publicly listed, are demanding it. And frankly, C, and the most important is your customers demand it. How, Rachel, how you use your financial services today is going to evolve. It's going to be different because you expect that same level of service that you might get from a technology provider. I think you can make an argument that, you know, I'll use the Netflix example. I mean, they're pretty good. I mean, like, even the limited customer service experience I've had with them, it doesn't really go down for me, but when it does, I send an email, I get a response in like minutes and I'm done, right? That kind of level of service, I think customers are going to be more demanding. And at the end of the day, this is, I think, what drives innovation is if there's a pain point or there's a better way of doing things for the customer, when you're solving the pain point or you're making their lives better, that financial services are going to have to think more holistically about their value, not just about making a little bit more money or a little more spread on their customer, but really thinking about how are they enriching their lives? How are they making their lives a little bit better? How are they helping them build wealth? How are they helping them find investment opportunities? How are you thinking about maximizing the broader relationship with that customer? So I think there's a lot of things in that that at the core is, at the end of the day, with everything that we do in financial services, has to be the customer. If you're not focusing on the customer and using technology as they're using it, then you're just going to fall behind, in my opinion.
Yeah, thank you so much. Yeah, you're totally right. With companies like Netflix, or in Canada, we all use Amazon so much.
Sure.
We've kind of been spoiled in customer service. And so they've kind of set the standard for other corporations to be at that level of customer service.
Rachel, I just have to say, I'm like, think of what exactly spoiled. When was the last time you were spoiled or delighted by a financial services provider, whether it's an insurance company, whether it's a bank, a credit card? Like, think about that. When were you super delighted by that? And that tells you something. Right? Like,
yeah.
Level of expectation.
Yeah, definitely. Well, thank you so much, David. Appreciate your time.
Thank you, Rachel. Appreciate your evening.
Thank you, Rachel, for your insightful questions too. I do have to say, I recently opened my Pioneer account. I didn't know about them, but because I connected to another institution.
Hello?
Oh, I was muted. Sorry, I'm back again. I was saying thank you, Rachel, for that insightful question. And I do have to say that I recently opened my Pioneer account. They're like a mock sort of this online financial institution. But not, I don't know if they can be called financial institutions, but the payment process. Mm-hmm. And I was quite delighted. It was very fast. They asked me to upload all of my information online. I was a little bit hesitant at the beginning, to be fair, because they're like, oh, your ID and your rental agreement and all these things. But once it came across, they even sent me a physical card here to Hong Kong, and I got it like in 3 days. And I can use that prepaid MasterCard whenever some of my clients pay me online for my services. So I was surprised. I do have to say I was surprised for that one.
I mean, I think Yamilette, you hit on it, because we're in Hong Kong, not just Pioneer, but with many of these other companies that are thinking about the customer experience. Sort of back to Rachel's question, putting the customer at the core of it. And for those of you who don't know, there are now 8 virtual banks in Hong Kong where the process of opening a bank account is in minutes versus what hours it used to be, where you had to go physically to the bank, bring all the paperwork. If you didn't have the right paperwork, you had to go home and come back or get it printed out. And it's super easy to open up your bank account. And it's also providing access to people that might normally not want to have a physical bank account, if you will. And so younger folks are liking it more because you want to do everything on your mobile. You don't want to have to go to deposit a check, right? Like that seems to be sort of almost a backwards idea right now. So you're right. I mean, I think there's innovation going on to make the experience easier and hopefully cheaper. Because I think with your service provider, what they're going to want to do, they're collecting a lot of data on you and other customers. Yeah. They want to innovate. And provide innovative services that are better service to you than you can get elsewhere. And the other advantage, which I think people need to remember, is what happens to traditional firms, that I think it's like Rachel's point, which is it forces them to innovate, right? So some of these disruptors may not disrupt day one, but the traditional firms will disrupt themselves because they're realizing they're going to have to catch up. So they'll provide hopefully better services. And if they do that, who benefits? The consumer benefits because we have more choice and better products than we had access to before. So that's one of the, I think, great benefits of startups and entrepreneurs in the fintech space. It's forcing the established folks to step up their game and hopefully delight us with their services, which I don't think that's happening very soon.
Anytime soon. Well, hopefully, yes. And oh my God, the time is up. If anybody else has another question, I will just want David to wrap it up. If you can leave us with one piece of advice when we have to think about fintech and what's coming in the future, what would that be?
Sure. I think I'm going to not just give one piece of advice, I'm going to give a comment and then I'll give piece of advice. And one is fintech is in a very interesting spot right now. And I think specifically for this audience, I hope it's relevant. You're talking about two industries, finance and technology, that have a pretty not ideal track record when it comes to senior female leadership around the world. So I think that is something where I would look at a couple of sources that are out there where there's really good reports right now as people talk about what does the leadership look like in those spaces individually, but then also going forward, especially when you're in the space, the intersection of finance and technology, which is where fintech really sits. So we have more CEO like Jane Fraser at Citi, and there's very senior women who are CEOs or C-suite at some of the largest financial institutions in the world. And I think we're seeing more and more on the technology side, hopefully. I had this recent report from this group called FT Partners, Financial Technology Partners, where they just announced this report on women in fintech. It's very US biased, but Rachel, maybe that'll be something to look up if you haven't seen it before. And it goes into that. So that's just more of a comment that this is a space that needs to understand the customer very, very well. And if you have to serve the entire world, not just one side or the other, so it needs to be represented by the people you're selling to. So I think that's some comment I would just make, and that hopefully there's more representation across fintech companies overall. Number two, because it's critical, I think, for the success of the space. Number two, the advice I would give is never stop learning. Always ask questions about why this is good, why that's not good, but never think you know everything. I think there's a lot of folks that have been very, very confident in making predictions about fintech, and it's the end of X, or this is going to be displace the US dollar or whatever. There's been a lot of predictions. So I guess the two quick comments when it comes to fintech: you have to stay on top of the trends because they're always evolving, and also keep a very skeptical mind to make sure that you're picking up the true pearls of wisdom and not just buying into some of the fluff, if you will, in my opinion, that sometimes the froth, if you will, that sometimes is out there. So that's what I would say, Yamilette.
Oh, thank you very much, David, again for all of your insights. And as he's saying, keep it open. Rachel, thank you everyone for being here. Accessibility and efficiency for fintech. And this is what Few also provide us as members, these platforms where we can connect. So remember, if you want to know more about David or directly connect with him, just chat to the team on the website or the different ways to chat with Few members and team and have that network, building it strong and keeping learning. So thank you once again. I am Yamilette, and I see you soon in our next session of #AskFewAnything. Thank you, David, and everybody else for attending today. Have a wonderful Thursday. See you next time. Ciao.
Thank you.